In 2017, the South African mining sector is roughly the same size as it was in 1994. So in other words, in real GDP terms, the industry hasn't grown at all. And yet we're sitting on all this so-called incredible mineral wealth, yet the industry has to all intents and purposes been shrinking. In fact, in 1994, the industry was 14.7% of GDP. Last year, we were down to 7%. So when you reflect on mining and you say, but phew, this is the flywheel of economic activity, just think about the multiplier effects. For every one job created in the mining sector, we estimate that there are another 2 jobs created in other sectors. There are roughly 1.4 million people employed in the whole economy as a result of mining. And just remember the multiplier for the number of people that are reliant on the mining sector is 10 to 1. So for the 1.4 million people that have jobs as a result of mining, there are 14 million South Africans that are directly dependent for their daily subsistence on the sector. Let's just think about the growth angle. If we grew at 3% a year instead of by 0 per year, within 15 years, this sector would double its economic contribution from a GDP perspective. What would that mean for employment? There would certainly be a lot more people employed in the sector, not as many as a doubling in the size of the sector itself, but we would double exports, we would double investment, we would double the procurement that we buy from the local economy, and we would more than double by multiples the amount of transformation that takes place in the sector. But in order to get that growth, an absence of competitiveness will mean that the status quo will prevail, and the status quo means that the industry continues shrinking as a percent of GDP, but stands still from an overall GDP perspective, and the job numbers will continue to fall off.
A competitive mining industry is an industry that produces minerals which are capable of being sold on the world markets and still deliver a return to the owners of those mines. That's what a competitive mining industry is. If we have a competitive mining industry, it means we can grow it. We can get investment into that industry. We can build more mines. We can produce more minerals. We can employ more people in those new mines. And of course, the suppliers who supply to those, there's a benefit for everybody if we can have a competitive mining industry. If we have an industry whose goods are so costly to make that they cannot sell on the world market because other people in other countries are making their minerals at cheaper cost, then we don't have an industry.
So South Africa is a country that is blessed with a significant mineral resource endowment. A resource endowment that has been significantly mined over the course of the last 130 years of the more modern mining industry. But there's huge potential that still exists. In fact, South Africa is ranked 20 out of 91 jurisdictions by the Fraser Institute survey for our mineral potential, assuming best practice. Unfortunately, we currently ranked 80 out of 91 jurisdictions for our policy scorecard. So that's our policy to promote investment in the mining sector. So minerals in the ground don't represent wealth unless they can be mined economically, in an economically feasible way, in a viable manner, in a safe manner, in a transformative manner, and in a manner that builds South Africa's society into a society where all stakeholders are proud of the sector, etc.
The primary objective in South Africa, really, if we want to take full advantage of the vast potential of our industry, ought to be that we create an environment that makes it so attractive for people to want to invest money that we can extract the highest possible benefit from our mineral resource. I mean, I look at our own company, for example. We take waste, stuff that other people have thrown away. It's just been standing there. And we generate 2.5 billion rands worth of revenue every year flowing into this economy. More than 2,000 people are employed. And we're one of the smallest companies. Can you imagine some of the larger companies, if they are allowed to continue to operate, continue to prosper, the number of people that they get to employ, the amount of money flowing into South Africa, because most of these minerals are also sold offshore. So it's a very important source of hard currency, of currency flowing into this economy and growing the size of our economy and our GDP.
Now remember, we need essentially other people's money in order to start these mines. So and capital has no loyalty essentially. They've got a choice. You know, there are 208 countries out there in the world, and a lot of them have minerals. So people have a choice as to where they can spend their money. So we as South Africa have to actually provide that conducive, secure, competitive environment for people to actually then undertake mining. If we don't have new projects coming on stream, we're not going to be growing the industry. But also you must understand that South Africa is a mature mining jurisdiction, so it's not as if we've got those dripping roasts and those fantastic projects coming up. The projects that are coming up down the line are mostly marginal, so we've got to be very careful and try to ensure that we nurture and get those projects online.
The Minerals Council did a survey at the end of 2017 asking members, what if we were in the top quartile from a investment attractiveness perspective? So in other words, we were rated in the top 25% of investment destinations globally. What would they invest in South Africa over and above their current plans? And they came to the conclusion, we came to the conclusion after the data they had given us, that in fact the industry could invest 84% more, over 140 billion rand more in the next 4 years if we were ranked in the top quartile from an investment attractiveness perspective.
Most of the funders in the looking at opportunities in the mining industry are looking for good return on their capital. So in the mining industry today, my personal experience, when we founded Seriti, it was not easy for us to find funding, simply because A, investors look for confidence in the industry, investors look for certainty, and capital itself looks for a home where it will be able to deliver a good return.
In terms of the charter or any policy framework for any industry, we need certainty. And I think that's the most important thing. I think it's great to hear our leaders, our political leaders saying, we understand that policy certainty is critical. So that's a big tick. I think we're trying to go down that road. I think the second thing is that the conditions that are put in place have to allow projects to make money. I always say that investment won't come to a country if you can't demonstrate you can make a return. If we can show that you make a return, people will invest in the country, they'll invest in good projects, they'll invest in the people of South Africa, but we have to be able to show them we can make a return.
South Africa last year attracted 1% of global exploration expenditure versus Australia at 14% and Canada at 14%. Why is South Africa getting such little share or such a small share when we should be, given our resource endowment, getting a lot more? Now, what investors are looking for is they're looking for certainty. They're looking for predictability, because these projects are 30 to 50 year time horizons. And so if you're not certain and predictable, it's heck of a difficult to justify an investment. But they also are focused on the issue of competitiveness. And what that really means is that unless you have policies which are stable, which are predictable, and which are competitive, you're not going to get the investment that we require.
You could have the very best geology in the world and the very best team of people, but if you've got an uninvestable sovereign destination, people won't give you the money. You need a lot of starters. You need a lot, and only a limited number will progress through the ranks to finally get to the top of the pyramid. In South Africa, we have got to the point that we've got an inverted pyramid. We have only 1 or 2 explorers at the bottom. Unless we invert that pyramid, unless we actively take steps now to start discovering the next generation of deposits, they are going to be mined out and there's going to be nothing left.
We have very few projects coming up. We're talking new operations coming up. So our pipeline is almost dry. And then you've obviously then got the juniors that are out there also struggling now to really make a go of it in South Africa because of primarily a lot of the red tape. We're talking about risk capital here, and there's so much red tape in the South African context. So what we need to be doing as a mining sector is firstly stimulating that exploration, making it easy for those small miners to get up and going, because at the end of the day, that's the future of the mining sector.
When I was growing up, business people were people who owned the grocery shop around the corner. And it was always a Mr. X. He owns this. And when I buy bread from him, it's him who's making the money, and so on and so forth. And it took a long time, and me being an accountant, going to college and so forth, to understand that really big business of billions of rand doesn't quite work like that. It's not normally a big man behind the ownership of a given mining company.
When people ask me about who owns a mining company, I always start with who doesn't own a mining company. If you can recall, in South Africa's history, there were a number of dominant individuals that used to own mining companies. That's not the case today. From about 30 years ago, ownership started to change. Today, for our company, Anglo American, 35% of the owners are South African, and generally they're average South Africans that have pensions. Those monies are actually invested with fund managers who invest for a whole range of people, and they are the actual owners of Anglo American. Just average people on the street, each having a pension, and that money is invested, whether it's through PIC, i.e. the Public Investment Fund, or other funds in South Africa.
There are people who just put some money aside for their children's school or whatever, and they must invest that money somewhere so they can get it back, and get it back with a return, so they can do whatever it is they want to do.
So as a company, when we're developing projects, we have to be able to show to fund managers who actually make investment decisions on behalf of all of their owners that our projects will actually make a return. So like someone putting money in the bank, they expect some return back. They too expect a return, and they invest that money in our company on the basis that our projects will make a return. If we can't show that we can make a return, they won't invest and the project doesn't get developed.
What is a free curry? A free curry means, supposing there's two of us, you and I, and we want to build a mine. And the cost of building the mine is going to be 100 rand. A free curry means that I put in 100 rand, you put in nothing, but if you're going to be carried 10%, then you own 10% of that mine. When there's money coming out of the mine, if we make 10 rand in the first year, well, I get 9 rand and you get 1 rand. So for my 100 rand, I end up getting 9 rand back. Whereas if there was no curry, for my 100 rand, I would have got 10 rand back. So you're being carried because you're not paying into this mine. Now what happens? Also, say 10 years later, 15 years later, the mine is a bit tired. You need to put in more money to start it, to make sure that it can revitalize. The same thing happens. Is another 100 rand required? I put in 100 rand, but when we get money out, I get 9 rand out, you get 1 rand. That is what the free curry is all about.
In order to offer a competitive return to your shareholder, either the resource has to be a spectacularly attractive resource, really like a bonanza resource, or they're not going to come. The competitiveness of that investment is then such that people would rather take their money somewhere else and say, well, we'll rather invest the money in Mali or in South America or in Canada, where there's no risk of an erosion and a dilution of value, and no risk of having to support as a passenger a certain component or segments of your shareholders. Most investors investing in the resources sector invest on behalf of other people. They're fund managers, so they're naturally conservative, and they want reassurances that they'll get the returns that they promise their clients. And the risk of a free carry, for example, is that the returns that you expect, that you otherwise would have expected those returns are at risk. Those returns could be eroded, which renders your jurisdiction less competitive than other jurisdictions. So it's not necessarily that it's so bad that you don't want to invest money. It's just that you're not as good as some of the other jurisdictions also competing for that same pot of capital. It's like running away from a lion. You don't have to be faster than the lion. You just need to be faster than the next guy.
The important thing to note about this Freakery and why people complain about it so much is that we don't know what the future holds. So supposing there's a new project, it requires 100 rand and it's going to make 10 rand. But I, as an investor, require a return of 10%, so I require 10 rand. If somebody else comes along and I have to free carry them, then I will not invest because I'm not going to meet my 10% return that I want to have. So that particular ore deposit, that particular mine will not happen. So when people say it's going to make us uncompetitive, it's going to stop investment, that's what they mean. That people who are looking for a certain return will not be able to get that return because they have to free carry other people.
If you weigh up the benefit of free carry, yes, there's a sense of political and ideological satisfaction as opposed to what is the price that we pay, less attractive, lower returns. Do the two really weigh up? Is the economic upside on the free carry side proportionate to the sacrifice and the downside? I really don't think it is.
Mining is a long-term game. Mining is also cyclical. In other words, there are times when the markets are good and the prices are up, and there are other times when the markets are down and the prices are down, and therefore mines are not being profitable. We've gone through this cycle recently where really everybody was losing money. And so being an owner of a mine and owning some shares, whether free carried or not, does not guarantee you benefits. It does not guarantee you cash flows.
I do think, though, that when it comes to, for instance, the broad-based players, the employees and communities, while with employees, they have a closer connection to the company, so equity can work for them. But I still do think that maybe a profit share would work better for employees. For communities, on the other hand, I'm not really convinced that equity is the right way to go for communities. Communities want to see some cash coming into their communities. They want to see benefits. And I do think, though, there are other ways of structuring it so that they get benefits sooner than waiting for dividends through some shares. And remember, communities, the people that are in our mining communities, they tend to be in far-flung rural places. They're not your normal equity investors, so they don't really understand some of the consequences of being an equity investor and you know, being subject to the vagaries of the commodities market, which is a challenge for any investor. So now you're making communities these investors in equities. I think that's a challenge. I think what we should rather be doing for communities, ensuring that they get benefits and they get those benefits as soon as possible.
I don't really know if we have carefully considered whether equity ownership, in fact, achieves the ultimate objective of broader participation, of a better life for all South Africans. Of, you know, my life today is better than what it was yesterday, because the mineral wealth and the proceeds of our mineral wealth are being applied in such a way that it directly impacts on my quality of life. I don't really think that ownership, share ownership, achieves that.
The concern we have certainly with free carried interest is that what it's going to do now relating to new projects, it's really just going to be raising the hurdle rates for those new projects to come on board. So we're going to have less projects coming on stream, which is certainly not something that we want. We want all those projects that we can coming on stream so that they can provide more jobs, so that we can actually transform further and transform the economy of the country further. And then so there's the trickle dividend that's meant to be going to these new operations. I mean, these are new operations. They're not really going to be making much money. Certainly for the, we're talking mining, which is a long-term investment here. For 6 years to a decade, these entities won't be making that kind of money.
Employees are critical stakeholders in the life of our operations, in the life of our businesses. communities are also a critical stakeholders in the sense that where we do mine, there are impacts that are there within those community areas. So yes, they are very, very critical stakeholders in terms of engaging, because these are the stakeholders that we're going to have to live with, for as long as those operations are still in existence, and even during the time of closure and post-closure, we continuously are part of that society.
In South Africa, in terms of service delivery, we find that communities are expecting a lot from government, they're expecting a lot from business, simply because they believe there are resources to assist them. But again, our country is facing three big challenges: unemployment, inequality, and poverty. And for us as the mining industry, it is imperative that we manage the expectations. But we cannot, as an industry, do it alone. We need government to work with us.
The employees and the communities should have some form of a voice in terms of how we actually go about mining in their areas and how they get involved in terms of ensuring that their issues and their affairs are heard and that they are taken into consideration in whatever activities that we do. Now, as to whether, the way in which they participate is one where it is about a freakery, or even that matter, whether it's about actually ownership of shares in whatever form, whether it's a freakery or non-freakery, the real question one needs to ask is that what is the actual ultimate aim and objective of actually wanting to give equity to the communities and equity to our staff? If it is not about economic benefit, then we are missing the point. It takes time before any business can actually turn a profit. These projects are long-term projects, and there is a danger that the communities and also the employees can get a sense that these benefits will come immediately, and a sense of frustration will start emerging once they now understand that in spite and despite the fact that they may have gotten these shares for free, that does not translate immediately to any betterment of their life. That can create frustrations to a point whereby the ultimate objective of what we are trying to realize does not materialize. So there's got to be a different way, a different approach with which we can create economic benefits for the communities, for our employees, without necessarily them owning shares. And I think it's going to be incumbent upon us as the industry to come up with an alternative that we can put on the table.
The best and easiest way to do that is to have more mines. Okay? If you have one cake and you have to share it, it's a lot more difficult than if you bake another cake and you say, now I'm going to give you, this cake, and I'll return the cake that I already had, and then, each one of us has a cake. So we really need to grow this industry, and we haven't been growing at all in the last 10 years. We really need to grow it, and to do so we need investment. So we need to be able to put together a package of regulations that enables investment to come, and with this investment will bring growth. Growth brings jobs. Growth brings GDP growth itself as well, and eventually we can all find it easier to share in this bigger cake that we're going to make.
Governments of the day make public policy choices, and public policy choices have implications. If you make a decision to do a policy in a particular way, it's very important to understand the economic and transformational consequences of that particular decision. If a decision around a mining charter is a decision which leads to that charter being uncompetitive or having components which reduce the competitiveness of the sector and reduce investment in the sector, the consequence around the lack of growth or the economic opportunity cost of not having the sector grow, and the impact ultimately on our ability to achieve the National Development Plan objectives is significant.
The present charter, as unveiled by Minister Kwedemantashe, is a huge improvement from the previous minister, Minister Zwane, simply because the previous charter, we know there was an agenda behind it. Right now, the charter we're looking at and we're busy discussing with the Department of Mineral Resources It's a charter that looks into the future of this country, the future of the mining industry, and to try and ensure that we understand and push the agenda of transforming the mining industry and making it a better and inclusive type of industry.
We are very, very positive about the manner in which the minister has gone about insofar as engaging. Obviously, it is a negotiation, and we will continue wrestling each other with the view that ultimately we will find a solution that is going to be workable for all parties and all stakeholders involved, understanding the fact that not everybody is going to be happy with the final outcome, because the art of that, of what needs to be put in place, is something where there's going to be some form of compromise from all sides, and where we can collate ourselves to the center, where we have to, each party feels that they're giving up something, but with the view that we can actually effectively achieve the objectives of transformation while also achieving the objectives of growth and competitiveness becomes those two imperatives that are embedded as part of the solution.
A lot of transformation has occurred. I think we are so much on that journey that we now need to describe in a great deal of detail what excellence looks like, what a fully transformed mining industry or fully transformed mining company would look like for us to feel, oh, it's fully transformed. It's difficult to get to a destination when you're not sure exactly what that destination is. Where is it that we want to get to? And I think we should spend a bit more time, effort, and resources in describing and understanding with each other what is it that a transformed mining industry really looks like. What does excellence look like when we reach there? And then we can say, oh, exactly what we need to do from here to get there is 1, 2, 3, 4 actions.
To expect that the mining industry on its own are going to address all these complexities, which to a very large extent stem beyond just what the activities of the mining companies in those areas, but are systematic of some breakdown, if I may call that, in terms of the administration, in terms of the municipalities, in the lack of capacities, the lack of the ability to actually deliver the services that are required, which really, to a large extent, when you think about it, that we pay taxes for exactly to enable these things to happen. But in many instances, the communities continue not being serviced, they continue, and therefore the expectation now is that the mining industry should actually be the ones that deliver on what should, in some instances, be that is delivered by government. We see government and the private sector with ourselves working together with other organs, of society to actually address this. And we can only do this as a joint effort.
I think the way mining has transformed is one of the untold stories. I mean, I really do think that, yes, we have our challenges and we still certainly got some way to go. The mining industry has transformed tremendously. I mean, if you look at some of the areas where we are the leaders and the pioneers, if you look at the BE transactions, I think the figure up to 2014 was we'd had done really about 156 billion rands worth of BE transactions. I mean, if you think of these big, the black industrialists that are out there, a lot of them started in mining, and mining is not given that credit for it. When it comes to skills development, we are one of the largest contributor to tertiary institutions, to bursaries. If you look at the fact that I think we're only second to the state. Nobody else, no other sector of the economy has as many students in tertiary institutions as mining companies do. I mean, I'm one of those beneficiaries of those bursaries, certainly some time ago. And if you look at the other elements also, in terms of social giving and the CSI, through our SLPs, we are making tremendous change in the municipalities where we work as mining companies. Mining has always been one of the largest, if not the largest contributor relating to CSI. So in many areas, we are leading transformation. But yes, in some other areas, we are lagging behind, maybe employment equity, I think, because, mining is not really that sexy a vocation. But I think even in those areas, we're improving.
Governments of the day make public policy choices. And public policy choices have implications. If you make a decision to do a policy in a particular way, it's very important to understand the economic and transformational consequences of that particular decision. If a decision around a mining charter is a decision which leads to that charter being uncompetitive or having components which reduce the competitiveness of the sector and reduce investment in the sector, the consequence around the lack of growth or the economic opportunity cost of not having the sector grow and the impact ultimately on our ability to achieve the National Development Plan objectives is significant.
The issue of inequality in South Africa is a very complex one. It is one that requires all critical stakeholders, not just the mining industry, coming together to ensure that the policy environment, the regulatory environment, and all other instruments that can actually ensure that there is an environment that is conducive for education, an environment that is conducive for investment, an environment that is conducive to enable small businesses to not be encumbered by various regulatory impositions on them. All of these things have got to be done collectively because no one isolated part of this complex challenge can actually address these issues